If I can really go out and talk to investor to buy now, if they see Vietnam in the 4-year horizon, Techcombank, TCB, it is a leading bank in Vietnam and it has a 20% ROE. Now the bank is valued at $7.8 billion market cap. I expect by 24 they can command about 15 to $18 billion market cap.
Hello, I'm Noelle Lim on ASEAN Speaks by Maybank IBG. The spotlight has been on Vietnam as an economic beneficiary of the China Plus One strategy, owing to the US-China trade tensions. Last year, the stock market rallied 36%, making it a star performer in ASEAN. Maybank expects a further price upside, on average about 25 to 40% for the top 10 largest stocks, on the back of robust earnings growth and a live with COVID strategy rather than zero COVID. Maybank also expects the VN index could hit 1,800 points in 2022, led by banks, retail and energy counters. What will continue to catalyze the market when there are still foreign ownership limits or FOL? And how is Vietnam a fundamentally much better place to invest now? I speak to Quan Trong Thanh, our head of research in Vietnam. What has been driving the growth of the Vietnamese equities market?
The two key drivers for Vietnamese market over the past year and also into 2020 includes corporate earning growth. Last year, we have about 33% EPS growth for the whole market. And this year, we expect another 28% corporate earning growth on the back of like recovery in the whole economy. And another driver, which we think is more important and very robust, is the increase in the liquidity. Vietnamese liquidity has jumped from like $300 million on average per day to $1.5 billion today. And we expect that going into 2022, the participation of retail investor can still be maintained strong. But we also expect that the return of foreign funds can help Vietnam to maintain at least $1 billion in liquidity. And if this liquidity is maintained and it go into the key index movers, I mean like large caps, like bank, properties, and other consumers, then it would help Vietnam's market to enjoy another years to reach higher level.
Okay, so momentum depends on foreign investors returning and local investors staying in the market. To an extent, this depends on how confident they are about Vietnam's economic development and the inflow of foreign direct investments. How do we know this is not excessive market exuberance?
If we first look at the trend, before the COVID time, there's already the trend that the global manufacturer, they want to diversify the supply chain. The risk of supply chain is high if they're concentrated on one big market. So that's why they want to diversify. And I also think that they want to look for another country that have a competitive labor cost, to bring down the overall production cost. So I think Vietnam emerged as a country that Vietnam has many elements that to attract the FDIs. We have a stable political, and then we have a large domestic markets as well. And also Vietnam enjoy a lot of free trade agreements, and which make Vietnam become a right destination for FDI.
But logistics is still a challenge, isn't it?
I think the only bottleneck is about the logistics. That's what happened in like 2 years ago. But from 21, we see that Vietnam's government recognized the need to upgrade Vietnam to move up the global supply chain. So we focus a lot on improving the infrastructure in logistics. So this one really, have to address the concerns of foreign investors. So that's why I would say that the trend of FDI into Vietnam is a secular trend. It's not a one-off phenomenal thing. And also look at the way how Vietnam developed over the past 20 years. The first FDI wave coming to Vietnam, we see Samsung and Intel. And these foreign investors really help to de-risk Vietnam in the eyes of other investors. So now other investors, especially in the technology sector like Foxconn, Pegatron, they are all the big partners of Apple and other electronics producers as well. They see Vietnam, the risk in this market is much lower now. And Vietnam already, prepare in terms of logistics. So this altogether make Vietnam a strong destination for FDIs. It's a secular trend, not any exuberance.
Another interesting catalyst that you point out in your report is mergers and acquisitions. What is behind this trend? Is it encouraged by the government?
Right. Definitely, it is encouraged by the government because that's one driver of the M&As in Vietnam is the privatization of state-owned enterprise SOEs. The government in the pipeline, they still have 93 SOEs that they want to privatize, and there's another over 200 SOEs they want to divest the stake. And the rationale behind this is that the government really wants to, increase the efficiency of the whole economy. And one bottleneck to address is that they need to privatize the SOEs to increase efficiency. So that's a driver for the M&As in Vietnam. And if you recall, in around 2017, we have a big jump in M&As value in Vietnam. That is when the government, they sell the stake in the Vietnam's number one beverage company, Sabeco.
But COVID-19 derailed those plans.
We see some slowdown because of some delays in the valuation procedures and also the COVID time. It really slowed down everything. So we expect that going from 2022 onwards, the privatization of SOEs in Vietnam would be resumed and accelerated because it's still in the government agenda. They want to improve the efficiency of the economy. So that's the driver.
What about private enterprises? Are they keen on M&As?
Another driver of M&As in Vietnam, the private sector companies in Vietnam. And now they understand what they want to do, what they need to do. And they really need capital and expertise, especially in the digital transformation, in building a network for retail business. So they really want to bring in more capital and expertise from foreign investors. So I think this is a driver for M&As in Vietnam as well. And I expect that it have continued to see strong M&As in the banking, in retailing, even in energy as well, in education.
In terms of ESG, how would the Vietnamese markets stack up at the moment?
Balance scorecard as a whole, yeah, Vietnam still need to catch up with other ASEAN markets, especially Singapore, Malaysia, and Indonesia. But if you break down in certain aspects, yeah, the corporate governance, we see significant change over the past 5 years. And the driver is also the demand for offshore, for foreign capital. Because when Vietnam's bank or companies reach out to foreign investor, and the foreign investor now, they really want to highlight the ESG aspects. So the Vietnamese company themselves need to, install the ESG system in their operation. And the corporate governance is an area that before the ESG trend is already an issue that the foreign investor show the interest and concern as well. But so that's the area that we observe significant change of the past 5 years in terms of investor relation, in terms of information disclosure, in terms of interest alignment between the shareholder, local shareholders, and foreign investor as well.
What about addressing environmental issues? And I know solar renewable energy holds a lot of promise in Vietnam because you have so much land.
There's also a significant jump. And I think Vietnam stand out by sector implementation. Like we see Vietnam implement the solar renewable energy very fast. We are among the top 10 globally in the solar capacity installment over the past year.
What are some downside risks that you see in the markets?
There are two things. First is the inflation. Vietnam need to control the inflation well, below the 4%, which is the target. And with the inflation maintained, at benign level, it would first support the market to the equity market to stay, steady uptrend. And also the retail investor, they are not concerned about the inflation risk. They still maintain the money in the market. And also the foreign investors see that Vietnam can maintain growth and also control the inflation well, so they would come back. That's the first thing. And the second factors I think it's more kind of a wild card now is the geopolitical risk, because during the time when China slowed down, then there's a potential geopolitical tensions, which may increase the risk of Vietnam as a whole in the eyes of foreign investors. So I expect that the Vietnam government can maintain these two issues well. For inflation, we will still see this risk is low to moderate, because in Vietnam, the government and also the composition of CPI in Vietnam, with the food contribute like 30% of the whole CPI composition, and we see the trend in the food price, in the pork price is very the moderate level. So we, based on the survey with the bankers and also our in-house economics, we expect that the inflation target of below 4% is achievable. So not much concern about that. But the political tension, that's the potential wild card that we need to watch out for.
Okay, so in this situation, which are the most resilient companies, or what are your top investment choices?
Okay, so the top three names that we think the value is there for long-term investors, I would pick the number one first is in the banking, is Techcombank, TCB. This is like the largest private sector bank in Vietnam, and it's rising to be the number one bank in Vietnam. It has a profile a bit similar to the Bank of Central Asia in Indonesia, and the Indonesian peer is traded at around 3.5 to 4 times price to book, while Techcombank TCB in Vietnam is traded at only 1.5 times now, and the ROE is solidly above 20% over the next 3 to 4 years in our view. And the second name is in a bit industrial, but also a bit related to consumerism in Vietnam. It's a Vincom, VIC. And we see the big catalyst to watch for is the IPO of VinFast, the EV, the electronic vehicle maker. And we expect that the IPOs would happen towards the end of this year. And the street talks about the valuation for VinFast, it range between like 30 to up to $50 billion, while compared to the market cap of Vingroup, which owns VinFast, is only $17 billion now. So we expect that successful IPOs of VinFast will have to re-rate Vingroup, which we think is a good proxy for rising industrial manufacturing and consumerism in Vietnam. And the third name that we like is in the property sector is Vinhome, BHM. It is the largest developer in Vietnam, and the story about residential property for Vietnam is still there, because we see the urbanization rate in Vietnam now is just 33%, and it should reach about 45% over the next 5 years. And along with the rising demand for housing in Vietnam, we see that Vinhome could be the key beneficiary, and it's now traded at only 8 times PE compared to the peer of 15 times, which is the easy indicator. But if you look at the real net asset value, look at the land bank of Vinhome, it is the largest developer in Vietnam, dwarf all other companies. And look at the valuation like this, we think it's very, very cheap, and it's our perpetual buy for this company. And I would like to highlight, and the fourth name is in the retailing, the mobile world, MWG. The company itself, it has a strong organic growth, and also next year we expect that also they launched the campaigns for the IPO of their grocery franchise, which is Bách Hóa Xanh, BHX. So we expect that compared to a recent market transaction of another retail in Vietnam, the grocery, that peer is traded at nearly $4 billion in valuation. So we expect that the grocery trend of mobile world can command around that level. And once this happens, it's also a strong catalyst to re-rate mobile world.
The PEs or price earnings ratios are undemanding due to foreign ownership limits or FOL imposed on holding shares in the banks and former state-owned enterprises, some of the names you mentioned. What are the plans to liberalize foreign ownership, especially when there are many SOEs in the pipeline to be listed? How is the government progressing on this?
So the plans to be upgraded to MSCI emerging status is before 2025. So we have about 4 years now going forward. So to increase the foreign market, the market accessibility to foreigners, the FOL is one area. We expect there could be some change in the FOL for banks first, like from 30% overall now to 35%. But I would say that it would take a bit of time. And what I think is more feasible and faster is the introduction of NVDR, the same mechanism as in Thai market. That would be an alternative to improve the market accessibility to foreigners. I would say for the FOL, I would keep it as more like something, a surprise, a positive surprise.
NVDR or non-voting depository receipts, is that what the government is considering?
Yes, it is. It has been pushed on the table for over the past 2 years. Actually, I know that the World Bank, in the effort to help Vietnam's government to improve the capital market, really proposed this mechanism. They have a task force to communicate with the government to implement this. So there's certain steps to be in place to implement the NVDR in Vietnam. And one of that is the first thing we need to install the new trading system for stock market, and which is being done. And we expect that the new trading system would be would be installed in the first half of this year. And if it's really done, Vietnam would be first upgraded by FTSE to the emerging status. And then from 2023, when Vietnam can introduce the regulations in terms of NVDR, then we can have the NVDR officially launched from maybe late 23, and then we put into the watch list of emerging status by the MSCI from 24.
Exciting times ahead for the Vietnamese markets. Thank you for speaking to me, Quan Trong Thanh, our head of research in Vietnam. To get hold of our Vietnam Strategy Level Up report, speak to your trading rep or check out market insights on the Maybank Trade app or contact our sales desk. I'm Noelle Lim on ASEAN Speaks by Maybank IBG.